Now, Parag Gupta joins us, India and TMT analyst with Morgan Stanley. Now, TMT essentially means technology, media, and telecom. Parag, good morning. Thank you for joining us. Technology is where all the interest is, media is where all the confusion is, telecom is where the pain is. So, let's get the pain first out. Is this a good time to buy telecom stocks? Because whatever damage could happen to pricing, that pricing damage perhaps is behind us.
Hi, good morning, everyone. So, as far as telecom is concerned, yes, you're right. There is a paradigm shift that's happening in the sector today. We're seeing massive investments going into 4G rollouts, and obviously, tariffs have come down quite substantially because of some of the tariff aggressions that we've seen from a new entrant. Now, I think the point is, we're not possibly going to see, data tariffs go back up to where they were, let's say a year or 2 years back. So clearly, that's a pain point for some of the incumbent operators. On top of that, you're also looking at significant investments in capacities, be it fiber, be it new sites for either increasing densification of a coverage. And at some point in time, I would see the operators moving towards investments in 5G as well. It's early days for 5G, but that's something that we'll possibly start hearing in the next couple of years. So putting all of this together, we're basically looking at a situation where companies that are in a position to invest, will possibly be, some of the companies that one should kind of look at, largely because they will be able to fund their capex at the same time be in a more sustainable position. I wouldn't want to discuss specific stocks out here, but I think the point is that there is going to be pain in the near term, largely because of the pressure on tariffs. But I think from a medium to longer term, companies that emerge from this patch will potentially be a lot more stronger because they'll probably have better market shares, better networks, and as a result of that, much better customer experiences.
Parag, in TMT is really essentially about telecom, media and technology. And while we discuss enough about telecom and technology for reasons governing the respective sectors, media somewhere slips through the cracks. What is the potential that you're mapping here in terms of the different business models that are being represented in the market? So you have the distribution side, you have the broadcast side, you have print. I know there's limited representation, but even so, where is it that you're bullish? And have investors come back with faith in the sector at all? Given the policy challenges and the slowdown in advertising that we've seen impair gains.
I would say that, as far as advertising is concerned for the industry, we did see some kind of a slowdown because of, the whole demonetization impact. And that was followed by GST implementation as well. So industry ad spends did take a little bit of a hit. And that was a period when, advertising revenues for some of the media companies that we look at slowed down. But we believe that a lot of that is now behind us. Advertising growth has bounced back, and we've seen that in the numbers from some of the broadcasting companies that have come out in the last few quarters. So I think that pain is behind. Subscription revenues probably will continue to grow at mid-teen levels for the next several years because of the entire digitization program that has happened over the last few years. The benefits of that will accrue for a longer period of time. So I think from that perspective, we're looking at revenue growth profiles getting better. The second is content continues to remain very important. We are seeing a lot of new companies come in, both domestic and global, who are investing a lot more into content. The format of content itself is changing. So what used to be long formats earlier is also now, kind of branching out into shorter formats because a lot of the consumption will potentially happen on a mobile device going forward. So I would say from a media company perspective, advertising revenues will grow, but advertising revenues are going into different buckets now. So television, advertising continues to kind of remain stable in terms of as a percentage of total ad spends in India. But the area that's been gaining is on the digital side. So clearly, I think what we are interested in is we're interested in digital classified companies because incrementally a lot more spends on the advertising side are going online. and companies that are on the classified side who are leaders in different buckets, be it recruitment, real estate, autos as an example. These are likely going to be key beneficiaries of this change in spending patterns. Television advertising, as I mentioned, they aren't losing share as yet. They're actually still growing in terms of share of total spends. So I think from that perspective, media companies, in the broadcasting side should kind of benefit from that as well. I think the only risk I see out here is that with a lot more focus moving towards OTT. To that extent, I think there will be incremental investments required in new content, and there will be investments required to acquire customers to come onto these new formats. So I think that's going to be an area of investment for companies. The companies that are able to come out with good products and good content will obviously be, will benefit from the change that we're seeing amongst Indian consumers. But having said that, media continues to remain an area which will potentially continue to see growth going forward, just because, as more people come in on televisions or on mobile devices or both, I guess, the demand for content will only keep increasing. So localized content, different formats, and, participation in all the genres, I guess, is going to be critical for media companies going forward.
Fingers crossed on that one, surely, Parag being one. But tell us about IT, because the wave and the move in the currency has definitely favored the lot. But again, each of the IT stories is distinct from the other. There's a TCS on one end, Wipro on the other, and there is a mid-cap IT bunch. How long do you think this currency trade is going to favor the IT bunch? And within IT, where is it that your underweights and overweights are?
I would say that for IT, we actually got positive on the sector early this year, and the rupee hadn't really started moving at that point in time. So a lot of it was actually fundamental based. We actually thought that IT spends possibly are now, we're now in a situation where spends will actually start increasing. This was premised on a couple of factors. The first being that global growth continues to remain pretty strong. While we have seen some rhetorics on protectionism and some developments on that front, having said that, we still believe that global growth continues to remain strong, which means customers both in the US and Europe, which are important geographies for IT vendors, will spend on technology. Secondly, there's been a little bit of a pullback in spending in the last few years. Some attribute this to the US elections and the uncertainty around that. And some attribute that to the fact that customers themselves were not necessarily financially as healthy as one would want them to be. Now, some of those issues are now behind us. The US is actually doing pretty well. We haven't really seen any issues per se for businesses. On the contrary, the new US tax laws actually made earnings and cash flows even better for companies operating in the US, and hence, the general tendency for them to spend more on technology. And the third part is, while there was a lot of talk on digital, what we thought was happening last year was that a lot of digital deals were still smaller in size and the durations were much shorter, as a result of which there was low visibility on revenues, let's say from a 6 to 12 month perspective. What we started seeing from December 2017 onwards is that the adoption of digital is getting broader and deeper. Digital deal sizes are getting larger. We've actually heard companies talking about $40 to $50 million deals coming purely on digital, which was probably $1 million or so 12 months back. So clearly, that basically gives them the confidence that they will see a lot more deals coming through. And when deals scale up in size, generally, customers would like to work with the well-known, the established vendors, because they don't want to run with the risk of implementation issues. So I think from that perspective, I think the Indian vendors are well positioned. The second point out here is, the companies have invested a lot in building capabilities, be it in terms of domain expertise, be it in terms of establishing a larger on-site presence. So I think all of these put together puts them in a good position to take advantage of incremental spends that come by their way. Now, if I were to look at who's benefiting, who's not, we've generally been very positive on most of the large caps and the mid cap companies. The mid caps have done really well year to date. This has been basically happening primarily because their growth rates, both on revenues and earnings, have been a lot better than from the larger caps, and that's basically now reflecting in their P multiples. But we believe, based on the commentary that we're hearing from the mid caps, we see that business environment continues to remain very strong for them. They're very confident of growth going forward. And I think that makes us believe that the mid caps continue to remain in a pretty, in positive territory. But having said that, if I were to just kind of compare this to the large caps, I would believe that the larger caps could be interesting as well. One, because they have limited client concentration. Secondly, as I mentioned, if deals are getting larger, customers would generally also want to work with the larger vendors. And I think third is that the larger vendors basically will, with their long-standing relationships with customers, will be in a position to leverage and get, a lot more of the wallet share. The commentary out there has been positive as well. So I would say that at this point in time, we would favor some of the larger caps over the mid caps.
Last question, Parag, would be, again, it's related to IT. We got your thoughts on telecom, media and IT. Is that, are you also working with the possibility of a second round of buyback somewhere coming in second half of FY19? Because as per the requirement, you need to give a gap of 1 year. And most of the IT companies, because growth is coming back, they would have generated more cash. And if a buyback comes now, that automatically changes the way how would look at the yield and how markets would start factoring in the future cash flows.
Absolutely. I think capital allocation has become an important point that most companies are talking about, largely because of the large piles of cash that is sitting on their balance sheets. And given that companies are embarking on M&A, but M&A sizes are much smaller. So to that extent, incrementally there is going to be cash accretion, and shareholders have been demanding for better payouts. So while we are not building in any additional buybacks later this year, because we're going to wait for companies to announce that, I think the general view that we have is that if companies are not able to find avenues for investments, then clearly that money is going to be returned back to shareholders. And I think that becomes a very interesting angle to kind of look at these stocks in the future, because they're not just going to be from a growth perspective, but it's also going to be a yield perspective. And I guess with most of these companies being cash rich, and with M&A requirements being there but being much smaller than what we've seen from the global companies, I think the general tendency is that payouts are going to be pretty healthy. I guess it all depends upon business needs. It all depends upon how growth comes back in. And to that extent, one would say that yes, I think shareholder returns is becoming an important point that all companies and managements and boards are thinking about.
We rarely get a chance to interact with you, but I look forward to many more interactions. And thank you for your time and thank you for your valuable thoughts.